On May 20th, 2026, Wall Street finally got to see the file. Not a rumor, not a leaked valuation, not another whisper from bankers, the actual IPO filing. And inside it was the company everyone thought they understood: SpaceX, rockets, Starlink, Mars, Elon Musk, the company that made space feel less like a government project and more like a Silicon Valley product launch. But then investors started reading the numbers. Revenue, $18.67 billion last year. Losses, nearly $5 billion. A valuation target, $1.75 trillion. A price-to-sales ratio close to 100. And the strangest part was this: the most important story in the filing was not rockets at all. It was artificial intelligence. SpaceX was not asking Wall Street to value a rocket company. It was asking Wall Street to believe in something much bigger, much riskier, and much harder to prove. A future where satellites connect the planet, rockets build the supply chain, and giant AI data centers float above Earth, powered by the sun, far away from the limits of land, power grids, and politics. That is the bet. Not reusable rockets, not Starlink dishes, not even Mars. The bet is that SpaceX can turn space into the next layer of the internet. But to understand why investors are even considering paying almost $2 trillion for that story, we have to start with the one part of SpaceX that already works: Starlink. For years, SpaceX was treated like a miracle machine, a private company doing things governments used to do: launching rockets, landing boosters, sending astronauts, building a satellite internet network so large it made old telecom companies look slow. And because SpaceX was private, most people only saw the legend, the launches, the explosions, the landings, the promises. What they did not see was the full financial machine underneath it. The S-1 changed that. For the first time, the public got a clearer look at the engine room, and what it showed was not one company. It showed three very different companies living inside the same shell. There was the space business: rockets, launches, Starship, government contracts, the original SpaceX story. There was the connectivity business: Starlink, the satellite internet network that was already making serious money. And then there was the AI business, pulled into the company after Musk's XAI deal. One of those businesses was clearly carrying the weight. In the first quarter of 2026, Starlink's connectivity segment generated $1.19 billion in operating profit, but the whole company still posted a $1.94 billion operating loss on $4.69 billion of revenue. Why? Because the AI division alone lost $2.47 billion on $818 million of revenue. That is the first strange thing about this IPO. The business that makes the company feel real is Starlink, but the business that makes the valuation feel enormous is AI. And this is where the story stops being about rockets and starts becoming something much stranger. Starlink is the boring part, which is exactly why it matters. A rocket launch is dramatic. Fire, smoke, countdowns, applause. A satellite internet subscription is not dramatic. Someone pays every month. The dish works. The signal stays on. The bill repeats. That is why Wall Street likes it. Starlink is not just a product, it is infrastructure. And infrastructure is powerful because once it is built, people start depending on it. Remote homes, ships, planes, military units, businesses, countries with weak internet, places where cable never made sense. SpaceX launches the satellites with its own rockets. It operates the network. It owns the customer relationship. It controls the hardware, the sky, and a huge part of the cost structure. That is rare. Most companies have to rent someone else's rails. SpaceX built the rails above everyone's head. Most of SpaceX's revenue last year came from Starlink's satellite internet business. That matters because it gives investors something solid to hold on to, while the rest of the story stretches far into the future. Without Starlink, this IPO would be much harder to sell. With Starlink, SpaceX can say, look, we are not just dreaming. We already built a global network. We already changed launch economics. We already forced everyone else to chase us. That is the good part. But then comes the part investors have to accept quietly. The public can buy shares, but they are not really buying control. Elon Musk will still have it. The filing showed that Musk would retain 85.1% of SpaceX's combined voting power. That means public investors may own pieces of the company, but they will have very little say over the decisions that matter. This is not unusual in Silicon Valley. Founders often want control, but SpaceX is not a normal software company. It is a company trying to build rockets, satellites, AI systems, and eventually infrastructure beyond Earth. And the person controlling it is not just the CEO. He is the brand, the salesman, the engineer figure, the risk, the reason some investors want in, and the reason others are nervous. That is the bargain. If you believe in Musk, the control structure looks like protection. It keeps short-term investors from ruining the mission. If you do not believe in Musk, Musk, it looks like a warning sign. You are giving your money to a company where one person can keep steering the ship, even if public shareholders disagree. And this is where the IPO becomes less like a normal investment and more like a loyalty test. Because at $1.75 trillion, investors are not just buying today's SpaceX. They are buying the idea that today's SpaceX is still early. That sounds exciting, until you compare the price to the numbers. At a $1.75 trillion valuation, SpaceX would trade at nearly 100 times sales. Nvidia, one of the biggest AI winners in the market, was trading at about 24 times sales. SpaceX also lost nearly $5 billion last year. That does not automatically mean SpaceX is a bad company. It means the market is being asked to pay an extreme price for a very extreme future. And that future has to be massive. Not SpaceX launches more rockets, massive. Not Starlink gets more subscribers, massive. The filing points towards something much larger: AI data centers in space. The company's plans rely on technologies and markets that do not fully exist yet, including solar-powered data centers in orbit, tied to a potential market the filing framed at $28.5 trillion. This is the second strange thing about the IPO. The most profitable part of SpaceX is a satellite internet business, but the valuation is leaning on a future where SpaceX becomes an AI infrastructure empire. And once you see that, the whole story changes. The rockets are not the product. The rockets are the delivery trucks. Starlink is not just internet. It is the first proof that SpaceX can build infrastructure in orbit and make people pay for it. And xAI is not just an AI company added onto the side. It is the demand engine. AI needs power. AI needs cooling. AI needs land. AI needs chips. AI needs data centers. And on Earth, all of those things are becoming harder. Power grids are strained, permits are slow, land is political, water is controversial, communities push back, costs rise. So SpaceX is offering a dream that sounds almost absurd until you remember what company is saying it. Move the infrastructure off Earth. Put compute in space. Power it with the sun. Connect it through satellites. Launch it with your own rockets. And sell the future back to Earth. That is not a rocket company. That is an attempt to own the physical layer beneath AI. But there is a problem. The dream is expensive now. xAI drove most of SpaceX's spending and a majority of its losses in the first quarter, with the AI-related purchase accounting for 76% of SpaceX's $10.1 billion in capital spending during that period. So the pitch becomes very simple. Trust us with losses today, because tomorrow we might control one of the most important infrastructure markets in history. Wall Street has heard that kind of story before. Sometimes it works. Amazon looked expensive for years. Tesla looked impossible for years. Nvidia looked overvalued until AI made it look cheap in hindsight. But sometimes the story outruns the business. And that is why Reuters looked at the last 5 years of high-valuation IPOs. The result was not comforting. Investors who bought the 50 highest valued IPOs in the past 5 years would have been better off buying an S&P 500 index fund about 3/4 of the time. The IPOs gained an average of 27%, compared with 53% for the S&P 500 over the same periods. That is the part nobody wants to hear during a hot IPO. The more exciting the story, the more dangerous the price can become. Because by the time a company reaches the public market, a lot of the easy money may already be gone. Early investors got in when the company was private. Employees got shares before the public could touch them. Venture funds, private funds, insiders, and connected investors had years to enter before the crowd arrived. Then the public sees the famous name, the giant valuation, and the headline. SpaceX, ticker SPCX, possible June listing, retail access through platforms like Robinhood and SoFi. And suddenly the IPO is not just a financial event, it becomes a cultural event. That is the third strange thing about this IPO. It is being sold to institutions, but it is also built for believers. SpaceX shares may be made available to retail investors through Robinhood, SoFi, and other platforms, giving individual investors a chance to get in at a lower price than they usually could. On paper, that sounds democratic. More access, more participation, more people getting a shot. But it also creates a powerful emotion, FOMO. The feeling that this is the one you cannot miss, the one you will regret forever, the next Tesla, the next Nvidia, the company that gets humans to Mars and turns satellites into the nervous system of Earth. And FOMO is dangerous because it makes price feel secondary. People do not ask, what is this worth? They ask, what if I miss it? That is the magic trick. A normal IPO asks investors to study a company. This IPO asks investors to imagine a future so large that today's price starts to feel small. But there is one more layer. SpaceX is so large that it could distort the entire IPO market around it. A listing expected to raise more than $75 billion at a valuation of roughly $1.75 trillion would dwarf every IPO on record. Experts said the deal could drain liquidity and attention from other companies trying to go public. That means SpaceX is not just entering the market, it is bending the room around itself. Other companies may rush to list before it. Investors may hold cash for it. Banks may treat it like the main event of the year, and Nasdaq wants it badly. SpaceX was targeting a June 12th listing on Nasdaq, with a roadshow planned for June 4th and a possible share sale as early as June 11th. The ticker was expected to be SPCX. This is the kind of IPO that becomes a scoreboard. If it works, every founder with an AI story will point to it. If it struggles, every banker will pretend they were cautious all along. But the truth is more complicated. SpaceX may be one of the most impressive private companies ever built. It may also be one of the hardest public companies to value. Because how do you value a company whose current profits come from satellite internet, whose losses come from AI, whose mission includes Mars, whose founder controls the votes, and whose future depends on markets that barely exist? You do not value that like a normal company. You value it like a story. And that story has to keep getting bigger. That is why this IPO is not really about rockets. Rockets are the proof that SpaceX can do impossible things. Starlink is the proof that impossible things can become monthly revenue. AI is the reason investors are being asked to pay a price that looks almost unreal. And Mars is the myth that holds the whole thing together. The $1.75 trillion bet is not that SpaceX will launch more rockets. It is that SpaceX can turn space into infrastructure. Infrastructure for internet. Infrastructure for AI, infrastructure for a future where the most valuable machines on Earth may not be on Earth at all. Maybe that future happens. Maybe SpaceX becomes the company that builds the next layer of civilization. Or maybe investors look back and realize they were not buying a business. They were buying a dream at the exact moment it became most expensive. Either way, the filing changed SpaceX forever. Before May 20th, 2026, SpaceX was the private company everyone imagined. After the filing, it became something much harder to ignore. A rocket company carried by Starlink, an AI company burning cash, a public stock with private control, and a nearly $2 trillion question sitting in front of Wall Street. How much would you pay for a future that has not been built yet?